If oil prices stay where they are now, we will see growth in the Russian economy. Alexei Deviatov, Uralsib Bank. Russian industrial production rose by 3.2% in December 2016, after a 2.7% increase in November. Will industrial production continue to make gains in January?
Yes, I would think so. And in fact, we expect that industry will grow 3.5% this year. There are several reasons. On one hand, we see and we expect growth in resource extraction sector to continue. Although the recent agreements with OPEC and non-OPEC countries about decreasing oil production will put a little bit of a constraint on production growth here this year, but still I think that not only oil but other natural resources we will see some growth in resource extraction here. More interesting story is, of course, manufacturing. And we see two trends in the data. The first trend is that import substitution story works to some extent because we see a sharp decline in imports of consumer goods after devaluation in late 2014. But the second trend is growth in non-oil and gas exports. So in particular, we see growth in exports of foods and agricultural products. We also see growth in exports of textiles, shoes, wood and wood processing products, precious metals, and some other items. So we see now that on one hand there is still weak consumer demand and retail trade volumes continue to shrink, but increase in manufacturing really tells us that these two stories work. So on one hand, import substitution within country, on the other hand, growth in non-oil and gas exports.
Will the removal of American-imposed sanctions on Russia help the country's economy recover from the economic crisis?
Well, I mean, if we look at the dynamics of foreign debt in Russia and capital outflow, we basically see that foreign debt stopped to decline, and we can even see marginal increase in the foreign debt, which means that financial sanctions, which were imposed in Russia, no longer work. So Russian enterprises now can refinance their foreign debt. And on the other hand, we also see a decrease in capital outflows, which is related to external debt dynamics. So I think that financial sanctions do not have much impact on Russia's economy these days. And I also think that given this situation, if the sanctions are lifted this year, then it will not cause a substantial increase in the debt, and it will not cause substantial inflow of capital. So basically, I think that if the sanctions are lifted, then the impact on Russia's economy will be very small. So let me say it from zero to slightly positive.
The Central Bank of Russia said that the country will be in the positive side of growth even if the prices of crude oil falls to $40 per barrel. How can this be possible?
Well, I mean, many people say, and I share this view, that growth rate in Russian economy depends on oil price dynamics rather than on the absolute level of the oil price. So we saw substantial drop in the oil price in the second half of 2014, and that was unexpected. That was a pretty unpleasant surprise for Russia's economy, and it reacted by recession, as we all know. But on the other hand, we see that the Russian economy started to adjust to lower oil prices. And in particular, we see changes in industrial production structure. As I said, so we see some import substitution, we see some increase in non-oil and gas exports, and that means that Russian economy adjusts to changes in the oil prices, and I believe that after this adjustment is more or less complete, well, we will see growth rates again here, even though oil price can be pretty low. So the real threat now for Russia is that if oil price drops even lower, suppose we see financial crisis in China, then the oil can be as low as $25 per barrel, and this will be another unpleasant shock, and it will probably cause another wave of recession in Russia. But if oil price stays where it is now, more or less, then we will see pretty decent growth, and our estimates show that this growth can be about 2% this year.
Thank you, Alexei, for speaking with me today, and thank you at home for clicking back. Goodbye for now.